Well, in one sense, what everyone's wheelhouse should be is we should be thinking about where the next risks are coming from. And there's this constant debate about overheating now. And one of the things that's clear is where there is overheating due to low rates, we need to keep low rates because economies are still broken. But you need to go after those areas where the overheating is manifesting itself. And UK housing is not suffering a bit of pain. Clearly, the stamp duty removal, which happened even before the housing market opened last year, was premature and a mistake. If you try and buy a house right now, solicitors are backed up like you absolutely wouldn't believe. And now this new mortgage guarantee, which is a good idea in principle because affordability is a problem for a lot of people. But the funny thing about this mortgage guarantee is that it's going to exacerbate some of the problems because it continues to add stimulus. And one simple ask is to make sure that anyone who is getting this mortgage guarantee has at least a 5-year fixed mortgage. And what the government has actually done, though, all they've done is require that every lender that participates in this program offers a 5-year fixed rate mortgage. That shows you how dysfunctional and how rate sensitive this housing market is. Everyone is getting 2-year fixed rate mortgages in this country or less. 70% of all mortgages are 2-year or less in terms of their duration fixed, and that's equal to half of GDP. So this has been a huge, huge windfall, obviously, for the housing market and homeowners, but more importantly for the UK economy as rates have fallen. But if we have to start thinking about when rates rise, the UK economy is one of the least or most exposed to that rate rise, because as rates rise, it takes money immediately out of mortgage holders' pockets. So this is the time when the government should actively be saying, let's push people longer in duration through taxation, through pricing, through policy, and they're just not doing it. And this is, Carney didn't do it. He sat on his hands. Everyone likes the idea that the housing market is fine, except for the people that can't afford it. But this is actually a structural vulnerability for the UK economy. When the US has to hike rates, it doesn't take money out of people's pockets. All it does is reduces the propensity to borrow. Whereas in the UK, when we hike rates here, we're going to see actually a huge recessionary impulse associated with that. And that's fine if the economy is too hot. You're trying to slow it down anyway, so smaller rate hikes work. But if we get a little stagflation here at some stage, a little bit of currency-driven inflation, the ability to fight that in a non-recessionary way by this Bank of England is very, very difficult. So I think that the idea of the mortgage guarantee is just a microcosm example of how policymakers don't take opportunities to get ahead of the curve. It should be a simple fact that everyone who benefits from this mortgage guarantee must have a minimum 5-year fixed rate mortgage. The fact that they're going to allow people to get variable rate mortgages and 2-year fixed rate mortgages with a 95% loan value, incorporates quite a bit of risk.